Let's move to the next part. SBR relief condition. Who can elect? Let's see who can elect. As I mentioned, I already explained this part. Now it's just summarizing the point in just for presentation purpose, but in terms of the technical or understanding purpose, we already seen this. A resident person, natural person. Who can elect resident person, natural person, and the juridical person. Okay. Condition for election. We already seen less than 3 million in current and previous tax period. Available for tax period from period on and beginning after 1st June. Again is the repetition. Who cannot elect? Member of multinational groups. With the consolidated revenue is a 3.15 billion. We already seen the person who artificially separate their business into more than one entity, leading to the revenue of each entity being below threshold for the small business relief. So as we already discussed, the artificial person, actually the business is same, but you are separated into 2 or 3 entities. And here let's move to the next. Small business relief revenue calculation. How we calculate the revenue? Accounting standard for the revenue. We already seen the revenue is the gross amount of the income derived during a tax period calculated as per the applicable accounting standard. What is the applicable accounting standard? IFRS. Now full IFRS or IFRS if less than 3 million, and if we are in mainland, we can go for the IFRS and revenue less than 3 million, we can adopt the cash basis. We don't have to go on accrual basis, because here is another technical point. If you go on accrual basis, maybe you are exceeding the 3 million, because accrual basis you are exceeding the 3 million. But same time, if you look into that on cash basis, because how much the cash you received, you made the sale, but you didn't receive the cash. So maybe you are less than 3 million. If you go on accrual basis, you may exceed 3 million. So again, the relief option you can catch over there. Business may use either accrual basis accounting or cash basis. This we already seen. This is the optional. Transfer pricing documentation not required. Revenue should be determined based on the arm length. Okay. Arm length is referring to the transfer pricing concept. Now the revenue includes which are the items that we should see while calculating the revenue threshold. Sale of goods and services by a business, sale of business asset. The same business who's selling goods and services, he have the plant machinery. We have the example for this. That will be part of the sale. Okay, then any exempt income such as dividend, even if you are having the dividend that we are saying is not taxable, but in terms of the revenue threshold, you have to calculate into that. Earlier, we many times we've seen the local dividend is not taxable, is exempt income. But to check the SBR eligibility, we have to calculate in the revenue. Market value of non-cash receipts, goods are received in terms of barter transaction. So we being a professional knows about the barter transaction. We did not make any payment and we didn't cash or the bank transfer. They have one plant, we need that plant, and he need another product from us. So we took the plant and we give him the product. This is the exchange. Okay, revenue does not include. Here we are saying we have to include, and now we have to understand while calculating the SBR threshold, that is the revenue base. So which does not include into that threshold? VAT. VAT charged by business registered for VAT. Because normally VAT we are collecting and we are giving to the FTA. This is not our revenue. So revenue without VAT. This is the important part. The loan and advances received, that also not the revenue. If you receive the loan from any of the related party or any of the investor, any customer, you receive the advances, that also not part of the revenue calculation. For the VAT purpose, you will charge the VAT on the advance. You may issue the tax invoice, but that will be not part of the revenue. Let's move to the next point. The example, the first example, we're going to see that for the small business relief, company A is a UAE resident. Person conduct real estate activity, real estate brokerage activity. Now here we mention the company, and he is doing the real estate brokerage activity. During his most recent, just let me see this Burhan Shahid. If our turnover in one tax period is less than 3 million and next tax period is exceeded 3 million, we can still elect the. Yes, see the first tax period is a 24. If it's less than 3 million, you can go for the SBR. In 2025, you are exceeding the 3 million. Then you cannot opt for that. Okay. What is the condition? In current and the previous tax period, if 2025 is exceed, then you cannot opt. And in the following year also. We will see this example, you will understand this point. Okay. We see in the company A is a UAE resident person conducting real estate brokerage activity. For real estate brokerage activity, he's buying on commission basis. He have the property from the developer and he's selling to the end clients and investors. And he's taking the his commission or incentive based on that. This our understanding purpose mostly is now in the market. If you've seen the real estate activity, real estate business or the construction industry or the new projects is coming. And coming means there is a huge investment in this sector. As most of these people I've seen from the Pakistan, that now we are familiar with the Malik Riaz Bahria town. So now the Bahria town, Malik Riaz also launched in the UAE also, the Bahria town in the Dubai South. He have the big size of the land and now he's announced the property, the society also. And maybe you are familiar in the Pakistan also, he's doing the campaign also for the same. Anyhow, the second, why I was mentioning this, because due to this, there are many brokerage agent or real estate agent, they are now taking the license in the Dubai South also. Just to capture this, I met one of the gathering the person. He's a real estate brokerage agent. So he said more than 1,000 companies in the Dubai South or the agent is available to promote this campaign also. But anyhow, this is the in terms of Pakistan, I just explained. But on the other side, we have to we also knows the Pakistan visa also ban. Even the visa is not coming. Anyhow, this is the another discussion. Let's come back to the topic. Brokerage during its most recent tax period, company A had a brokerage revenue of 82.5 million. And the dividend of the 300K from UAE company and dividend from UAE company who already knows is exempt, is not taxable, and operating expenses are 2 million. So now here the important part we have to understand, because for SBR we just now understand the calculating the SBR is available based on the revenue threshold. If revenue is 3 million or less than 3 million. So now what is the revenue? 2.5 million and plus 300K. 2.5 million plus 300K, it's coming 2.8 million. It's coming 2.8 million. So still less than 3 million, we can go for the small business relief. Here we are adding the 300K into the brokerage because we said even is exempt, but to have the threshold calculation, exempt income will be part of the revenue. So that's why it's coming 2.8 million. And the cost is not matter because we are checking the, we are verifying or testing the revenue threshold that is less than 3 million. As long as is less than 3 million, he can offer, he's eligible for the small business relief election. The word will be the elect. He can eligible to elect the small business relief. This is the, the technical name or in terms of the taxation or in terms of the return also. Note, the cost and the profit are not relevant for the purpose of assessing whether company A is eligible for small business relief. Just for our understanding, we already understand this point. Let's move to the next. Now the second example, the revenue in a previous tax period. Now one of the participants asked this question, so let's see this. Mr. Y operate a licensed real estate sole establishment in Sharjah. Okay, he is a UAE resident person for corporate tax. His tax period ending on 31st December each year. But here he mentioned the sole establishment. In the tax period ending 31st December 2026, Mr. Y derived revenue of 1.8 million. And in the previous tax period, because now the revenue in the previous tax period, we have to make the test for that. In the current year, 2026, revenue is 1.9 million. And the revenue in the previous period, that is the 2025, is 4.3 million. So Mr. Y is not eligible to benefit for the small business relief in the period 2026. Why? Because the revenues exceed 3 million in the prior tax period, which means in 2025, he also not able to opt the small business relief because this is his first tax period. So again, the word is the tax period, not the accounting period. So once your revenue exceeds 3 million, then you're not able to opt for the small business relief. Okay, let's take another example. Determine the taxable income in the following example. Assume all the parties to be taxable person. Okay, let's Mr. G operate a business in a Fujairah and he's a UAE resident person. Okay, for the corporate tax purpose, his tax period end on 31st December each year. To date, Mr. G revenue has never exceeded the small business relief threshold for the 3 million per tax period. Mr. Here is mentioning, okay, 31st December is a year end for each tax period, and the G revenue never exceeds small business relief, that is 3 million. He mentioning, giving us the information. In the most recent tax period ending, Mr. G generate revenue of 2.5 million. Now he's mentioning the previously is less than 3 million. Now in 2026, his revenue is 2.5 million. Because previously also less than 3 million, now in this year also less than 3 million, he will be eligible for the SBR. Eligible for SBR as his revenue for the tax period ending 31st December 26 does not exceed 3 million. Consistent with the previous tax period. Again, the word tax period is important. The benefit from this relief, he must make an election. See the word previous tax period, why I'm emphasizing on that, because even while our study in the taxation training in the PwC also, people have the ambiguity. People not able to understand this point. Even the previous tax period is they are mentioning not the accounting profit. Even previous accounting period, the profit is more than, or revenue is more than 3 million. That doesn't matter. You have to calculate from the first tax period. That is, if revenue is not exceeding 3 million, you can opt for the SBR. Let's move to the next. Carry forward unutilized tax losses when electing for small business relief. This is another example we already discussed during the topic. A GLC, a UAE resident company in a tax period 31st December. Now here I highlighted the 25. We have to focus. GLC revenue was 1.9 million. In which year? 2025. At the beginning of the tax period, G had unutilized tax losses of 400. Okay, now he's mentioning the tax losses, the 400K is there, but revenues are less than 3 million. In the prior year, GLC revenue did not exceed 3 million revenue threshold. GLC elected for the small business relief for tax period ending 31st December. Okay, he have the from the previous year, from 2024. If we understand the tax losses is a 400 and the revenue is a 2025 is less than 3 million. So he's eligible for the SBR. Now we have to understand the next point in the next year, because now he's taking us to the next year, because he will give us the example carry forward unutilized tax losses. Here our understanding will be this part, carry forward unutilized tax losses. What is here unutilized tax losses is a 400K. This we understand at the beginning of the tax period, LCA had unutilized tax losses. This is our understanding. In the tax period 2026, he sold a factory to M for the 5 million, resulting in its revenue. The factory means this is the his business related item, the asset. So we'll calculate in the revenue. We will calculate as part of revenue. Its revenue is exceeding 3 million as per the tax period small business relief. Small business relief eligibility threshold is exceed the eligibility threshold. Here, what he's saying, if made this 5 million sold the factory, so definitely he's exceeding the 3 million, because the factory the asset will count under the revenue. Now, what is the solution for this? The point he want to explain the carry forward losses. Now, here we will understand the GLC carry forward tax losses cannot be utilized in 2025. Because in 2025 beginning, he have 400K unutilized tax losses. Now he's saying cannot be utilized. However, they can be carried forward and used in the future tax period where the small business relief is not elected, provided the relevant conditions are satisfied. Still, he's saying is not elected, but other conditions also need to be met. Other conditions also need to be met. Because in 2025, because we offer the SBR, so we cannot. Earlier, we seen this such exempt income or the carry forward losses we are not able to utilize. We may lose this. And you'll see the example here. 2025 we already seen. In 2026 he exceeds the 3 million, so G will not be eligible for the SBR in the tax period in 2026. G need to determine his taxable income for the December 2026. He have to prepare taxable income. He have to submit the complete tax return. Now it's not simplified return. If GLC has a positive taxable income, it can be utilized as carry forward losses of 400 from the prior exceeding period. Now here he's saying, he's just explaining, it's not full detailed understanding example. He's saying if GLC has a positive taxable income, if have the taxable income, so it can be utilized. Now he have the 400K, the losses, unutilized tax losses. But here again, the condition is there. So these losses we can adjust in current year tax against the taxable income. But here some limitation is there. 75% utilization restriction. Current year, the taxable income 75% or equivalent to 75% we can utilize in this year. And rest can be carried forward again. Any remaining taxable income exceeding 375 will be subject to 9%. So here we understand the 400K can be utilized. And second thing, we understand the 75%. The previous year losses, we can adjust against taxable income, but still one condition is there, that is a 75% utilization restriction. In down the line, we will see the detailed example of what is this 75%. And we will see the carry forward losses also.